Okay, hello traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, August 28th. Good to be with you guys this morning. Jaya, Marco, good morning. Kamal, Peter, Pete, Tom, and Ty. Great to see everyone here in the room. Dagon, great to see you. Hey, I just saw your email was forwarded to us from the intern. Did you have a question on the swing trades for Jamie? If the swing trade doesn't include the latest, or let me say this, if we publish entry level, right, or a swing pending update with the orders, and it's not on the next following update, that means it's no longer valid, right? That means the entry didn't trigger or we're already out of it. So Dagon, just keep your eye on the swing update for the most recent stuff there. So good to be with you guys. We are coming into an interesting area for the dollar pullback. Yesterday we went over some of the majors. Today we'll go over DXY, Euro, dollar Swiss, and dollar CAD from yesterday. Dollar CAD breaking support early this morning. We'll circle back to the other update for a quick update on sterling. Not really a big fan here, but we are heading towards resistance. Dollar yen, Aussie kiwi, and gold now at resistance. Okay, so we've been playing the gold side for that rebound off of key critical support 2 weeks ago. We're now approaching the first major resistance hurdle in that gold rebound. So we'll take a look at that. As always, guys, any questions or trade setups you want to review, feel free to throw them on the message board. Jaya says Aussie dollar. Yes, sir. You got it. Okay. So here's the DXY. And I guess we should just take a quick reference to where we were in DXY last week. Here's what we were at the close of the week. We were talking about a near-term picture, staying bearish below 95.75. It actually turned right into that and never got the kiss. And here's the downside move. Now, today we're breaking this support barrier, which was defined by 94.92, 94.96. We're breaking this, but we're checking monthly open support. So this is exactly where we opened the month of August. The actual open was 94.56. We're trading at 94.57. Next major support target to the downside is this right here, right around 94.20, 94.27, a basic 38.2. This is a longer term from the decline off the 2017 highs, but you have basic slope as well, right? Those slope that we talked about yesterday, touch, 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 that converges down there, okay? Looking for a hole below 95.15 if we have legs on this stretch. So as long as we stay below that, and again, that's actually the swing high from November of last year, I like to move lower. So a little cautious here in the fact that we have a third day of consecutive declines. Could be a little bit of a rebound, but ultimately we're looking to see if we can't get that drop near 94.27, 94.20. Here's the intraday chart, guys. So just to zoom out a little bit, there's that slope, okay, 94.20. There's the former swing lows from that July 18th drop, and there's channel support for the current operative formation that we're in. So little hesitant, like I said, because we're testing the monthly open here. So you could see a little bit of a pop, but ultimately we're looking to see if we can't get that drop into 94.20, 94.27. I'd expect to see a little bit more of a rebound there, but again, it's a sell, okay? Now, one thing I did want to just bring to your attention is I was checking this out this morning. If this is sort of the onset of the decline, just to make sure that it's not corrected, we want to see that 100 extension, and it comes in at the next lateral level. I don't have it here just for the sake of clarity, but 93.65, okay, comes up again as a critical area of importance. That's the 38.2 from this year's range. That's the 100 from the high, and that's former median line resistance, now support. So your next downside target, if we do see that break, would be down here, okay? First things first, right now, heading into the US session, we're at support, okay? So look for reaction there. 95 would be resistance. 95.15, again, is what we want to keep as near-term bearish inval. Drop lower 94.20. Any questions on the DXY? Dagon says, perfect, thank you. You're more than welcome, sir. Jaya says, thank you, sir. I'm more than welcome. I got you. Okay, so that's DXY. Nothing really crazy to write home about. We opened the week talking about that 94.96, 94.92 pivot. Okay, we've broken below it yesterday, and now it's offering near-term resistance. Where does that leave us on some of the majors? Here's what Euro looked like last night. So again, similar to the DXY, um, are you no, are you not looking to fade there? Ty, talk to me about that. I'm not sure I get the question. Fade the dollar decline? You mean fade a drop into here? Is that what you mean, Ty? The slope? Yes. Okay. So if we were to get down here, we'd be looking at near-term price action, Ty. I wouldn't, let me say this, on an intraday basis, if we're getting into here and price seems kind of stretched, there's an intraday oversold signal, or you're getting some decent triggers, it might be a decent fade opportunity, but I'd be really light, okay? Because there's a couple of things that would happen if we break the monthly open. A, that would be an objective break of the monthly opening range with only a few days left on August trade. So Ty, if we break these lows, objectively, that calls for a late month low. So whether that's, Thursday or Friday later in the week, it's hard to gauge, but this would be the target of which I'd close out short positions. As far as trying to fade it, again, if there's a real compelling case, yeah, we might take a scalp to the upside against it, but I'd be very nimble on a trade like that, right? Because the overall encompassing theme here is a break of the objective monthly opening range. Make sense? He says, okay, thanks. Yeah, you got it. So for the euro, it was checking its monthly open last night. As I was writing this, we were checking 116.91. As I noted, that was again monthly open resistance. The ideal confluence support is exactly how this thing played out. It's exactly how this thing played out. So initial support at confluence, we just broke through 116.60. That's this region here, former slope resistance that we pushed through. That's near-term support. Bullish inval gets raised to 115.95. Topside breach, you're looking for the July high day close at 1750. Now we've broken, but we're kind of losing some steam here. Here's what euro looks like now. And I do want to note that the divergence signal that you're seeing in the momentum oscillator is not encouraging, but certainly, these are the levels to look for. Again, 1750 is going to be the high day close from June. You can see it here on the daily chart as well. Just higher, you have the 100-day moving average, okay, right here. But more importantly, the July actual high comes in at 1790. So the levels are pretty well defined as far as the targets on the upside. And look where we found a low yesterday. The actual low was 116.62. So 2 pips off, but you get the picture. Okay, this is basic stuff. And again, I'm not going to sport and tell you I'm in this. I wish I was. This turn obviously was in, wee morning hours here in New York, but what a perfect spot to hold. Okay, your weekly opening range high, or at least the initial Asia opening range high was 1650. There's that confluence region of support. Again, forget the pitchfork, right? Irrespective of this, you have basic trendline resistance. 1 touch, 2 touch, 3 touch confirms, 4th touch. There's the break. You want to find support right there? Boom, we got it. Now, I just want to caution again because that's weird. My edit undo button's not working. But in any event, you get the picture. Right? Come and support bounce. Like I said, my concern is that I don't want to chase it here just because the momentum doesn't look quite as healthy here. So no new entries on the long side, in my humble opinion. If you get the drawdown from here and it turns lower, I do think you see a test of that just basic trendline support off the monthly lows. So if you're holding long exposure, bring your stops to break even, but you're still looking for 1750, 1790. there's nothing here to really turn our attention just yet. Here's the 120 minute just to give you a closer picture on momentum. Again, it's nothing to like get too concerned about just yet, but certainly doesn't look like it wants to hold up here much longer. So looking at buy pullbacks again, near-term support levels, nothing changes from yesterday. Nothing changes from yesterday. I just an advance this mature, it's tough for me to kind of favor, trying to chase this on any new exposure from here. Definitely got out way too early on this last week, but I think we'll get another opportunity to get back in. Interestingly enough, and this is something just to take in focus, euro client positioning, guys. This is the IG client sentiment index, basically telling you what the positioning is on retail trading platforms. You can see that traders have gone net short euro again for the first time in quite some time. And this is off of extreme net long exposure for the year. Okay, so the markets are primed, sentiment has shifted, price came off of key support. Again, the weekly chart in the euro is really well defined as far as where we rebounded off of earlier this month. Here's the breach of resistance. All things held constant, it looks pretty convincing for a larger reversal here. Ty says, I need to get the setup and sign in for the automated alerts from Jamie's section. I have tech here at 10 Eastern. Can you help me? Sorry, need to send this at the end of the session. Yeah, Ty, shoot me an email. Yeah, shoot me an email. I'll be more than happy to set you up for that. We're kind of putting that on pause for a little bit, that project with the automated signals. We're still assessing performance, but we do have a beta test, so maybe shoot me an email, see what I can do for you there. But the euro, the focus is higher, right? The focus is higher. If you're holding longs, don't get out. If you're looking for new exposure, I would not chase this from here. There's no responsible place to put a stop against that low. You're already 50 pips off that low, guys. Next upside target's only 30 pips away. So if you're not in it, not the time to start jumping in, but certainly we'll be looking to see these topside targets in the next couple of days. All right, that is euro. Number 2, any questions on DXY or euro? Numero 3, Swissy. Swissy. So we had an update on Swissy last night on all the charts, and the major thing that we want to talk about, we've been following this trade, interestingly enough, since earlier in the month. You had a real clean monthly opening range break. Guys, this is like the technicals at its finest. And when you see something like this, you want to take advantage of it, even if it's in a pair that you're not necessarily thrilled about. You guys know how I feel about Swissy. It's not really a pair I'm very active in historically, at least over my years. But the levels were pretty clean. So again, excuse me, just to go through this real quick. Here's your monthly open, right? Here's your monthly open. Here's your monthly opening range, right into the upper parallel. Once we got that break on the 21st, it shifted our focus dramatically to the downside. Initial targets were 98.45, 97.83. I thought you were going to get a little bit bigger of a bounce here. The 100% extension of decline converges right on those lows, but the next downside target is basically upon us. I want to bring your attention to the 200-day moving average. That's just pips from lower from where we are now. Also, the median line for the current formation off the yearly highs. That's right. Whoops. That's right here. Okay. And just lower beyond that, the yearly open and the 38.2 retracement of the entire yearly range. That gives you 97.33 into 97.44. So 11 pip range of support, just below that 200-day moving average. A messy region, a really important region for Swissy near term. So based on the price action that we've seen this month, you had a very clean, absolutely beautiful monthly opening range break. That calls for a late month low. We've only got 4 days, 4 sessions left on the month. Risk is for some sort of exhaustion down here in Swissy. So I'm very, again, hesitant to chase this any lower. If you're holding short exposure, wouldn't necessarily bail, but definitely watch that moving average and these three levels. Here's what it looks like on the intraday chart. I have them all highlighted for you from last night. Okay, 97.53, 97.43, and 97.25. All three of those levels are levels of which I would clip away. If you're holding shorts, take a little off at each one of those levels. Bring your stops below, or I should say just above 97.88. As long as we stay below here, your focus is still lower in price. But these are three levels of which, look, any one of these could offer a little bit bigger of a rebound here. So just use caution here. 97.53, 97.43, 97.25. Real clean stuff. Now, the reason some of you might be thinking to yourself, Ty, I'm kind of like trying to read your mind. I think you might be thinking to yourself, well, Mike, is this a good area in these three levels to start to look for a fade, right? To play the rebound. I'll tell you why I'm not interested, especially in a trade like this. Again, we take it back to the technicals that we talk about 101. Typically, your break of a descending structural formation to the downside will be the sharpest part of the move. So I do not want to play cute here and try to catch the low. These are levels of importance. I'd be booking profits. I wouldn't necessarily try to fight it unless we got something really strong in momentum, like a real strong divergent signal, something really, really sort of compelling. But on whole, a downside break of a descending formation can be the sharpest part of the drop. So if this is going to perpetuate, if momentum, remember, can stay in oversold condition for quite some time, here's the last time we broke into oversold. We spent from the 20th all the way till the 22nd, 2 full days in oversold territory as this thing just plummeted. So this is important, okay? On initial resistance, again, look for resistance ahead of 98, 97.90, 97.88. But these three targets, all three of which are pretty important, as far as price. Questions on Swissy? And again, here's the weekly chart that I showed you last night. Another reason to be cautious here. You have longer term moving averages of consequence. You have the 200-week moving average and the 52-week moving average. So your yearly moving average, both converging right here. So a good area of which, if we're going to find some support, guys, wouldn't be too surprised to see some recovery off this level. With the same respect, it's a pivot, right? So if we close below 97.33, that would be that mark of a downside break of a descending formation. And in that case, again, you'd be risking some pretty steep declines there in Swissy. Questions, comments, concerns on Swissy. So far, everything today looks like it is aiming for the end of the week. I agree. Yeah. And especially when these monthly opening range breaks happen late in the month, like we did here, we got this on the 21st, right? You'd be looking for a low into the Thursday, Friday session. Again, that's not always an always statement, Ty, right? But, statistically speaking, that's kind of what you'd expect to see. Any questions on Swissy? Dollar CAD is of utmost importance. I've been tracking this thing like a hawk, especially after the news that we got yesterday. Obviously, a breakthrough in negotiations between the Trump administration and Mexico. You saw markets really favor that announcement. And you might be thinking to yourself, well, what the heck does that have to do with Canada? Again, the implications for a similar type of agreement or how that will reflect on a sort of template for what agreement will work out with Canada. In any event, it stoked some CAD strength, which is exactly what we were looking for. We talked about 29.51. We talked about 29.67 as being a key area of support. Why? What's so important about that level? Well, here's dollar CAD from last night. you have the long running 200 week moving average lower. Well, that's lower from where we are. Let me get back to the daily chart first. Here's the reason. You have 100% extension from the decline, 2967. A 38.2 retracement of the yearly range, so all of 2018 trade, and the 50 line. You see this? So this is a modified pitchfork off the yearly lows. Right, this is a shift. Turned right ahead of that 618 line early in the year. We rallied into the upper parallel, turned lower, again turned right ahead of the median line, again turned right ahead of the 618 line. That same slope converged on that Fibonacci level. More importantly, let's say I'm a little bit biased, I've drawn my lines in such a way, whatever. More importantly, objective monthly opening range, just like we saw in Swissy. Here's your monthly opening range low. You set a high in the first 13 days of trade. You break the low, you look for a late month low. So yesterday, the focus was on whether we crack 2950 or not to the downside. Here's the break. Your immediate downside targets, 128.80 is going to be that 38.2. This is of the entire advance from the 2017 low. Okay. And then this region right here. You have the 200-day moving average. You have basic channel support for the operative trade that we're in, and the lower median line parallel for the pitchfork all converge right down here. So you're looking for 2880, 2840s, okay, as your initial support targets here to the downside. Initial resistance at this point goes back up into 2967, okay? The same top end region of that support zone we were looking at now is resistance. These are immediate downside focus targets for the loonie. Here's what it looks like on the intraday charts. Okay, real clean break. You know, in overnight or last night, I was telling you that sort of the initial resistance, if this is going to move lower, we wanted to see a rally towards this. 2980s would have been like, you know, the preferred. Okay, there's a typo here. I was looking at my notes. Not 129.95, guys. I'm sorry about that. That's a typo. I switched to 9 and 2. 129.92. That 95. This was this region here, right? That's what I was looking for in overnight trade. If we saw a rebound off this region, this would have been a beautiful entry. You also had those former swing lows from Friday. We never got that high really. Okay, right? The high that we registered in overnight trade was 29.82. So there is the failure. You know, again, if I was up in overnight trade, would I have taken that? It would have been a tough call, but the outside 4-hour reversal bar is certainly an exhaustion scream, right? So had I been around or up during this, you know, a tight stop against the high there is a really, really nice move. 30 pip, 25 pip stop, looking for a drop towards 28.80. So again, another missed opportunity from my end. I hope some of you got a chance to get into that overnight, but look for 28.80. Again, 28.40s is where you start to run into that lower parallel. But really clear, beautiful play in dollar CAD, and certainly that Trump news yesterday further fueling the flame here for some further CAD strength, dollar CAD weakness. Any questions on dollar CAD? All right. Ty says Euro Yen, please. JPY for Ty. Okay. On the list, sir. All right. So that is dollar CAD number 4. I'm just going to breeze through the next couple of ones because I'm not really actively trading them. Sterling, I did highlight the update for you on Sunday. You know, I think it's something worth tracking as far as how to get in this in a responsible trade. You know, there's an opportunity to fade weakness early in the week against the Friday low. Again, I've been sort of trigger shy, guys. I'm not going to lie to you. I think it's based on the count that we're heading into the close of the month, and maybe a little too excited for vacation this weekend. But um, that being said, it's the near-term picture is the only thing you really want to look at. Sterling on the daily chart is just it's just like what the heck do you do with that? 30.27 is the big level that you're looking for as resistance. We're nowhere near that now. So this hasn't really been all that fruitful. The only thing I want to highlight here is sort of in my mind what validates a false break. And different people will look at this differently, but the way I interpret this is you got to break up our momentum trigger here. It coincided with a break of the lower parallel. We drifted here. As I said, guys, I don't like where this bottomed. Near term, there was some slope, but on the daily charts, there's really kind of nothing really here per se to get me really worried about that decline. Low day close comes in at 26.97 now, but here's the reversal back above that slope support range. And then momentum, look at that. That same 4-point momentum trigger, we broke above on the pullback into slope support. Momentum holds trigger support. So things are starting to look quite interesting for resumption higher here in sterling. I'm very cautious on this. Sterling is one of those trades, again, notoriously professionally traded market. It's really well known that this thing is notorious for the false breaks, the throwovers and whatnot. So I'm willing to trade here the long side of sterling. The question is, how do you get into that on the intraday charts? Here's what it looks like. So the 120 gives you a little bit more perspective. That same slope, guys, that we added last week, just basic 2-point support touch. Okay, the same exact slope has still been in play. Here's what it looked like last week. As we were coming to this near-term support, we even noted, if this thing is heading higher, we want to see a weekly close above this key support. Well, we got the tag of the 50, and here was the rally into resistance. Last night, early in the week, we highlighted bullish above 127.99, basically 128. Here's the crack, and now we're checking this former swing highs from last week. So 29.37, look for a breach there. If you do see the top side break, the bigger level is 130.27, like I told you on the daily chart. That also is reflected right here. Nice pivot in price. And that's going to be your upside target on the breach. A super low conviction trade for me. Again, I would, if you put a pistol to my head, I would tell you I'd rather be long. But trying to attack it from here is sort of, it's tricky for me. It's tricky for me. I'd still be looking at 28.77, 28.80 as near-term support. Bullish inval, I just highlighted, guys, is going to be your weekly open. Okay, 28.45. If we make it back below the weekly open, that's going to compromise basic slope support, and that would again shift the focus to the downside. All things held constant. We're really looking for a little bit more of an accelerated breach to the upside here. Okay, but with everything that we just talked about, I wouldn't be too surprised to see some failure here. The pullback again. Ideally, a stop against the weekly low would be the best position for the long side. But we'd have to materialize a little bit more of a pullback from here. Questions on sterling? That is number 5. All right. So let me hit dollar yen real quick, and then I'll actually segue tie into your euro yen question. Here's dollar yen. Kind of losing focus into the start of the week. The basic major level that we've been talking about in dollar yen, it hasn't changed. Okay, I just want to show you the weekly charts. You guys have all seen this. That basic trendline support from 2012, has been sort of a decent pivot in price. Here's what it looks like on a close basis, right? So again, the rebound off support last week came off a huge level. We were talking about 109.90 for weeks. That rebound is testing your initial resistance here, essentially. Here's what the daily chart looks like. The 50% retracement of that near-term decline comes in at 111.46. Former swing highs from back here in May comes out 111.40. that's basically exactly where we capped out last week. So look, this is what I want to say. Dollar yen hasn't broken or given us a clean monthly opening range. Um, we were talking about this yesterday in the webinar, Ty. I remember me and you were kind of throwing it around. Yeah, I was initially looking for a larger decline. The response we got at 109.90 can't be ignored, and the recovery off that level can't be ignored. Near term, however, here's what the intraday chart looks like. So basic slope, it's kind of null and void at this point. So for me, into the start of the week, it was hopefully for a move down into here, and then we look for re-entry on a move higher. But the risk from here, guys, is this is a key pivot in price. We just looked at it on the daily chart, how pivotal it is, even on the weekly chart. Here's the intraday. Look how many: break, acceleration, resistance, resistance, break, acceleration, support, support, break, acceleration, resistance, 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 resistance. So worth a deeper pullback before we start to move higher again, right? Could be. So look, what I wanted to say with dollar yen is, on its face, it is a simple weekly opening range below resistance. Those tend to be decent plays. You got to be patient with it. So for me, the ideal scenario is that we break lower, we test either 110.80 or even as deep as 110.58, 110.63. This would be sort of a sweet spot for me, just on account of where slope is as well. And then you look for a little bit more of a base here to launch off of. It's either that, so the drop here to get long, or the breach above 111.50. We'd look for a pullback at that point to get long again. I think that would be the sort of breakout zone. Till that happens, guys, it is a range below resistance. Very simple. Nothing here that's screaming bearish per se, but there's not much that's sort of fueling the upside at this point either. So we have to be a little bit more patient with this. Again, ideal favorite scenario is that you do get a draw lower for a larger bounce. So that's euro yen. Number 6. Let's take a segue into Ty's question here on, or that's dollar yen. Let's take a segue into Ty's question on euro yen. That'll be number 7. Haven't really been following it, Ty. So let's take a look at what price action is doing, shall we? Okay, so right off the bat, I'm just looking at the daily chart. Monthly open resistance is going to be like your next initial focus. That's right here at 130.78. Monthly opening range highs comes in with those former swing lows from November of last year. That's 131.16. Don't need that. Okay, just ahead of that, there is some slope to be mindful of. Let's see where that 50 line comes in. Okay. Okay, and that 100 lines up there as well. All right, everything is kind of 132.30, 132.60. This is going to get messy, but just bear with me. I want to see what it looks like. Okay, so look, there's not much, there's nothing here really as far as a trade setup in my humble opinion, Ty. I'd be looking for resistance essentially in this nuzzled region, 130 like 60 into that 130 80 level, 130.78. Watch that basic slope support, resistance off the yearly highs. Watch again monthly open resistance, 130.79. Let's look at the near term chart. First of all, let me just check one thing real quick. Here's your weekly. All right. Yeah, so look, on its face, basically since the end of Q2, this thing has been in a range. Right, Ty? I think you'd agree with me. Support, support. Um, don't mind that per se. Don't mind that right now. Your range is right here. You've tested support twice. You've tested resistance essentially twice. And again, that moving average basically governing the highs, just into 30, 31.40, 32. So the intraday chart looks like this. Here's a pitchfork. Obviously, I must have been playing around with this earlier. Some divergence into the highs does mark the risk for a corrective pullback here. Ooh, weekly open support comes in at the 618 retracement of the range. So watch 28.29, 29.28, excuse me. Yeah, that's literally your open, 129.28 for the month, for the week rather. So that's going to be your near-term support. A break below that is what shift my focus more of a corrective stance. Wouldn't be looking to get long here. I know, Ty, or I don't want to say I know, but I suspect you are interested in fading this, right? Um, I think you're on the right track to start to look for that somewhat soon, but it's not there yet. It's not there yet. If we get closer to 32, I think it's the best place. I'm looking to get a regular handle on this pair. Yeah, Euro Yen is one of those pairs for me, Ty. It's sometimes is exquisite, and the levels are very, very clean, and sometimes it's not. It's a yen cross, so I'm never surprised. Anything with the abomination in it can give you some pretty radical price action. But um, all things held constant, you know, you look higher, but you look for some sort of reaction off of monthly open resistance to monthly opening range high. That gives you a range of 30.80 into 31.17. Ty, does that help? Does that offer some color on this one? That's sort of your sweet spot. Trading it rarely, but when it hits your numbers, I want to be there. Amen, Ty says, no FOMO, just wait for the best. Yes. All right, cool. Yeah, I'm with you. I'm always down to check out any asset, guys. Never shy away from asking. I'm always down for a challenge. But Euro Yen, I think here, I mean, obviously if you're long, more power to you, bring your stops in. But trying to get any new positioning from here, the only thing I'd be interested in is sort of an exhaustion trade if we do find some reaction up there. Dagon's using an old saying of mine, African seashells. Yes, yes, I will trade seashells if they are a liquid market and price action's clear. Absolutely. All right, so that's Euro Yen, number 7. Let's circle back to the update. I just want to cover Aussie Kiwi and gold. Okay, gold is coming to a big spot. Aussie Kiwi, not much price action going on here. But I just want to highlight again, the levels are pretty clear, guys. I put this on the update for Sunday because I did think we'll get a decent breakout in the coming days. Remember, the focus of this trade is that we're coming off a pretty big resistance level and breaking back below the yearly open. So sort of the focus on this one has been on this reversal trade here and the pull lower. That's the weekly chart. The daily chart was highlighting this really critical range between 109.13 and 109.96. That's essentially the trade for me here, okay, is a break of this focal range. Maybe bring that support up now to just to hug that 50 parallel. But this is sort of the range break that you're looking for the focus. On a downside break, there is a ton of technical factors all lined up just above 108.30, 108.30, 108.40. This 10 pip region here. You got the 200-day moving average, the 100-day moving average, the lower median line parallel, and 50% retracement of the yearly range, all right there. So on a break of this range, you have a very nice, 100 pip move, 90 pip move to the downside into this support region here. Your base case scenario is against 109.96. If we get through this, kind of scratch the whole idea. But again, with a trade like this heading to the end of the month, it didn't quite get into that zone. So I'm not in this, unfortunately. On its face, again, the weekly opening range is super tighty. Here's your weekly opening range lows. We're testing that right now. The weekly opening range highs, again, we were looking to see this extend into this region. We turned ahead of it. Markets don't work in a vacuum. All else held constant, look for the weekly opening range break. This is the breach or the break that would open up the move into 108.30. On the intraday charts, the levels highlighted give you a soft target here at 108.69 and then bigger slope support and that confluence region we just talked about at 109, 108.30, 108.41. But this is with the case scenario that we hold the yearly open resistance pivot. If we get back above that, I'm going to scratch that idea. Okay. Any questions on Aussie Kiwi? Interesting pair, I know. Not the most popular, maybe, but certainly I think it warrants some attention, specifically with the levels that we're trading at here. All right, I'd actually be more inclined to work with this slope. It's been my experience that typically, guys, when you're looking at a couple of different slopes that both are offering pretty decent touches in price, you're almost always better off going with the deader slope or the lesser, what's the word I need? Oh, a more obtuse angle. You know what I mean? A deader slope, not something that's quite as sharp as far as slope is concerned. But this looks pretty decent actually here. So here's Friday's low right below the weekly opening range lows. That's sort of near-term support. And then key resistance is at the parallel. Looks pretty good. Let's work with this, guys. Here's the 60-minute just to give it some reference. See if we got the decent slope here. Support, break, resistance, median line break, resistance, 50-line break, touches lower parallel, divergence into the lower parallel. Here's the break to the 50-line, median line resistance for a little bit, upper parallel. This is still your focus range near term. Go ahead and feel free to take a snapshot of this, guys, to update the chart that was highlighted on Friday, or on, what was that, Sunday? Maybe not so cute. That's the word I'm looking forward to, guys. Thanks, buddy. Looks like yen at 109.91. What? What do you mean, Ty? You're looking for a move. I don't know if I missed that comment earlier. The chart on the daily. Yeah, that was a huge level. I know you guys heard me talk about this because I remember talking about it for like months. Maybe a little too early once we started turning, but that was such a critical level. I mean, the reversal, the moving averages and the slopes. Yeah, Ty, absolutely. I mean, you only get a couple of those a year. So beautiful reaction. And certainly anytime market reacts like that at your levels, it should build conviction in your trading. So that's Aussie Kiwi. Now let's hit gold. And then Jaya, I want to jump into your question on Aussie. Ty, I got your question on Euro Yen. But gold, look, it's critical. It's critical. It's critical. It's critical. I have good friends here in the city, guys, that work um, in the diamond industry and the jewelry industry, obviously in New York, right? So they have. I always get questions from dealers, like real gold dealers, asking about, um, where price is heading. I don't know why I bring this up. Look, at the end of the day, the level of which gold reversed off of was magnificent. This is sort of your first region of resistance. Here's what the weekly chart looks like. Again, it was 1171, 1175. Obviously, we overshot. It got much deeper here on that drop off, but such is the way that exhaustion lows are registered. And we started to shift our attention right after that weekly close that we made in the middle of the month. So the daily chart highlighted a very clean and well-defined lower median line parallel. This is just off the yearly highs. That literally caught the low to the pip. We closed back above 1175. First target was low day close for March. That was 1204. Secondary target 1214, 1215. Today's high registered at 1214.19. So what do we do from here? Well, we got the really clean resistance trigger break. That does suggest, again, that we want to respect this low. But near term, this is an objective pivot in price that we need to respect. I'll bring your attention to the May lows of last year, the July lows of last year, the 618 retracement of the entire late 2016 advance. And the low day close for July, 1214. Okay, so watch this region. Could see some interruption. Momentum is checking just above 50 here on the daily chart. Wouldn't be surprised to see some corrective action off this. Definitely, if you're holding longs, a good area to take a little off the table. Your next upside targets, I'd be a soft target right here at the monthly open. If we break through 1223, you're looking for 1236. So those levels are pretty clean. No change. Again, here is the gold update from this weekend. We want to stay constructive above 12. Bullish invalidation 1195. Top side targets 1214, 1215. And again, if we see that break, 1224 is going to be your next level of interest, and that's monthly open resistance. Okay, here's the intraday chart. Here's the intraday chart. Nope. No help there. But here's what it looks like in comparison to this weekend, or the last weekend. Here was the open of the week. Again, 1204 was initial support. We want to stay constructive above 1200. You got to drop as deep as 1202. Here's the move higher. And again, 1214, 1215. Curb your expectations up here, guys. Momentum is marking divergence. The divergence is in the overbought territory, so it's a weak signal, but nonetheless, not an area of which you want to start pressing the longs in gold. So I'm expecting some pullback here, guys. And I get just my humble opinion. The stretch that you're seeing in gold, the stretch that you're seeing in the dollar, begs a little bit of a recovery, of a little reprieve before resumption. But the levels look pretty darn good. Nothing really to get concerned about. All we're looking for is a reset to get in some of these trades that we've been following. Any questions here on gold? Jaya, Aussie. My dear Aussie. Oh my goodness. Typically my favorite trade. It's had nothing for me over the last day or so. The 73.36, 73.28 pivot, guys, if you're sick of hearing me saying it, I'm sick of saying it because it's just been a mess, man. I mean, we were playing the longs off it last month. Once we broke below, we were playing the short side. We turned ahead of the last year's open. I've been doing nothing ever since. So we have to wait. We have to wait. Here's the daily chart. This is, for me, just messy. I like shorting it when we broke. I love buying it once we broke above. I like using it as a pivot, but the conviction is starting to get really low, especially over the last couple of days, how we've been trading around it. So look, I'm looking at daily momentum. I'm looking for a conviction for a breakout, maybe that a near-term low is in place. I can tell you that the levels of resistance that I'm looking at are first that former slope support off the lows from July 18th, tag as support, resistance, and then monthly open resistance at 74.25. So, Jay, I don't have a strong opinion on how to play this near term. I don't have a strong opinion on how to play this near term. I think you get some more lateral movement, to be quite honest with you. I think this chops sideways. I think you test last week's high and then you come off again. If you find support at 73.27 again, might be a decent entry, but I have no interest in getting involved here on Aussie, at least at these levels. At least at these levels. And again, guys, recognize when the markets are not really giving us a clear trend, right? Um, it's great to track as many setups as you feel comfortable tracking, but what I'll actually operate on is not going to be as prevalent as the amount of setups that I'm tracking. And this is one of those where I think it pays to wait out till we get clarity on what we're doing here. I mean, let me say this. The best scenario for me is if we were to get sort of a spike here, failure, and a move back lower, back below 73.27, I'd look to fade a drop back towards slope support. With dollar ats or at least testing monthly open support, I think if Aussie rallies here and fails, you get the recovery in the dollar, move lower in Aussie dollar before you start to resume again. But it's not something, again, super low conviction. The levels just aren't there on the intraday basis. So I'm going to wait for further question or further clarity here on Aussie. Marco says, general question maybe for Friday's webinar. The level you speak about here are to be traded only intraday? Oh, you asked this earlier in the session, right, Marco? I missed it. Great question. He's saying general question. Maybe the level you speak about here are to be traded only intraday or can be used as a base for a swing trade. Great question. Great question. Marco, a lot of times when you look at the swing report and you look at the intraday report, myself and Jamie will be looking at very similar levels. Not all the levels, I would say, could serve as an entry basis for a swing trade. So, for example, you need to take, Marco, I don't want to dodge your question, man. I'm being completely frank with you here. You need to take each level on its own merits. So, for example, 73.47, that's a soft target. That's not structural resistance. That's not structural support. It's not a longer term moving average. It's not a longer term structure. It's just a soft target. So I wouldn't look to base a move for a swing trade off 73.75. But if price stretches into 74.23, that's a intraday scalp target, also may be used as a swing target or a swing entry as well, right? For the swing type of trading mentality, guys, we want to be looking for swings off of structural support, structural resistance, range highs, range lows, major key confluences. On my levels on the intraday charts, I offer you levels of which you can play intraday. Not all of them can serve as the base for a swing trade. Now, Marco, to be quite frank with you, some of this is just semantics. I'm a fan of scaling out of a position. So a lot of times, Mark, every entry I take has the potential to be a swing trade, right? Aussie is a horrible example. So let's look at something. Let's look at something a little bit cleaner of the setups we've been following. Let's look, for example, for Marco says dollar Swiss. Let's look at dollar Swiss. Sure. So here's dollar Swiss, right? On a trade like this, let's say you got an entry here on the advance, right? This was our bearish invalidation level. We were looking for a hold above that. Let's say you took a short here, right, against the high from Friday. A drop into here, I'd scale out the position, take a little off, bring my stop down to the weekly open, right? That was initially a scalp, right? But because of where the way the market has moved, I'll scale out of that position and leave a little on. So it turns out to be a little bit of a swing trade, right? An entry like this, let's say you wanted to fade this move. Let's say it rallied back above overbought. You're thinking to yourself, man, this is going to give us at least some levels. Michael has 98.45 and 98.67 highlighted. I'll take that long position. A trade like that, the scalp, again, you take a little off at 98.45, stops at break even. You might have got break even at that. If you didn't, and you had a little left on the table, your next target was 98.67. That, in my humble opinion, would serve as a little bit of a swing trade, but really near term. So even when we got into here, we took off another quarter of the trade, let's say, stops at break even or better, you probably got stopped out in the rest of that trade. It's a different type of mentality. But my point being is that when a major confluence level starts to emerge, it might be our target on the scalp with all on the longer term horizon. That might be a great entry to get in on the swing. Marco says, so the stronger the level, the better they can be used for swing, right? Absolutely correct, Marco. Absolutely correct. The more conviction you have, um, the more conviction you have on the levels, the more operable it is. You know what I mean? And guys, don't take my word on it. Here's dollar yen, 109.90. Um, we've been talking about that level for how long? You know what I mean? So Marco, this was a perfect example. Me, I'm always still taking things on more of a near-term basis because I'm using heavier leverage. So inherently, I'm not looking for 111.50 along off 109.90. Um, but had you gotten into this, probably would have taken out three-quarters of the trade, if not more here. And then the breakout, you're scaling out. So the entry tends to start to favor now exits along the swing levels, right? Guys, I don't want you to get too tied up with the semantics, right? We're looking for opportunities in price. We're looking to play what price action's offering, and if the opportunity is there and the price action is there, we get into it. Whether that trade ends up extending into a longer term position is completely, in my humble opinion, again, based on what price is doing. If you're taking trades, guys, based on the swing stuff, get in the trade, put in your entry and limit, and let that play out. Those types of levels, those types of trades that we're presenting for the swing type of trade, you don't need to sit there and watch intraday price activity all day. When you're taking a trade on a higher leverage, if you're taking a trade on a scalp, on a near-term price standpoint, then we do need to be more aware. We do need to monitor what near-term price is in fact saying. So Marco, I hope that helps. He says clear, thanks, much clear now. Okay, cool. Great. And guys, when me and Jamie, our levels line up dead on, man, those tend to be really strong conviction trades, as would entail. Um, and those are the ones that we'll tend to be a little bit more aggressive on. So hope that offers some clarity there. All right, guys, that answers all of the questions I got for today. Heading into the end of the month, so this is a good time over the next 2 days, not so much today maybe, but definitely heading into Thursday, Friday. It's an extended holiday vacation break here in the US. You get traders starting to leave the desks early this week, so volatility and overall market participation will tend to dwindle into the final sort of summer break of the year. So just keep that in mind as you get into the intraday positioning here to be a little bit more lighter towards the end of the week. And data-wise, we're pretty light. Okay, so the most of the event risk I see is going to come by way of these headlines, whether it's tariffs that are continuing to build up with China, whether it's breakthroughs on the NAFTA negotiations. Specifically, now we're looking to see how that leans towards sort of the Canada deal end of things. But we'll keep you updated as much as we can. Till then, best of luck trading, and I will see you guys tomorrow. Cheers.